gold bull Paul Theron from Vestag joins me today.
Gold bull.
I'm kidding. Or, with a copious amount of sarcasm, of course.
I don't dislike gold, but of all the commodities, it's the least attractive because it never goes anywhere. You know, it gets bought, it gets manufactured, it gets turned into something, and then it just hangs around. Unlike the other stuff, which you use it up, you got to go find another one.
Okay, well, gold rallying extensively. Another company that has been doing quite well, Harmony, up almost 12% today, ending the day off at 98 Rand 40.
Well, it's worth saying, just on the gold front, I mean, what I like about it is that as middle-class women in India become more wealthy, they're buying more gold for dowries and jewelry, and that's been the major demand driver in gold. Only about half of gold actually gets used. The rest is investment purposes and central bank holdings and so on. So I'm not negative about gold. I think that could be a positive driver. The Harmony story today, I don't know. I mean, I've lived long enough in markets. I saw that Goldfields thing with Pastorini, which must have been in about 2004-05, where somebody basically created a rumor that there was a buyout bid in the market.
And that's exactly what's happening.
And the next thing, it was up 11-12% on the day, and that's what we're seeing with Harmony today.
It's also interesting. We chatted to Peter Major a short while ago, and he was telling us about Papua New Guinea and, of course, the operations there. And it seems that everyone's sort of waking up and smelling your coffee now and saying, well, actually, these assets are amazing.
Point.
And this is why we see
because clearly the South African assets are these innovated old mines that nobody cares about, but the PNG assets are actually apparently quite good, and the resources have been good. Plus, last night, FreeportMcMoran, which is an American gold and copper company, which is therefore one of the only ones they care about, indicated that it was interested in doing acquisitions. So you put 2 and 2 together and you get 55, as normally happens in the gold market.
Yeah.
So that's where I think the excitement's coming from, but it wouldn't surprise me at all to see this bubble get pricked overnight.
Peter Major and Nicholas Cyril were saying one of the reasons that the stock is going up is because they actually sold as well. So I think they got a bit burnt over the last couple of days.
Well, I didn't sell any. Don't have any to sell.
Exactly. Would you ever buy into this gold story?
No, for that reason, unfortunately, the South African companies are all constrained by rising electricity prices, rising labor costs, blah, blah, blah.
Well, we know that story.
So the only ones I think worth considering, if you're really a dyed-in-the-wool gold bull, are those kind of off-the-margin ones like Pan-African, which has got this old resource which is redeveloping, and maybe that's going to be of interest.
Paul, you mentioned something very interesting for me. You said that central banks, of course, buy gold. And one thing that we have noticed is that central banks always get the story wrong. They sell at the bottom and they buy at the top. Bank of England
they get a bad rap.
Bank of England says exactly that they're not going to be buying gold at this point in time, even though they sold the.
So that's like a strong buy signal.
Do you think that's perhaps a strong sell signal?
Look, they've got these big gold resources, and occasionally when the going gets tough, they sell them off. But it's a remnant of the old days where currencies were underpinned by gold. In the new era, it's not the case anymore. So for me, it's like a relic. I don't care if they sell it all. In fact, I think they should. If the IMF has got funding requirements because it needs to back up, some country which is having a tough time, sell all the gold. I mean, what is it worth to anyone? Send it out. Get rid of it.
A lot of worth to women in India, of course, Paul.
Yes, they'd love to have it.
Exactly. Okay, let's turn our attention now to Jill Markets.
Yes.
5.5%, repo rates unchanged. And I know
well, it's become such a snooze. I mean, she's great, but the meetings themselves are boring. I think you and I should go to Pretoria for the next one and just intentionally ask some really dumb questions like, what's the decision at the next meeting going to be? Was this an anonymous decision? Because it's the same every time. They talk about the outlook and they do their job and everything's fine. But you know what? I think this is going to be the hallmark of investment decisions related to central banks in perpetuity. They're not interested anymore because no one's inflation expectations, apart from a few lunatics, or anything outside of the band. They're going to adjust a little bit when the economy's looking a little bit.
And people don't get it right. They always readjust and revise, and we don't really get a true sense of things because things change so rapidly.
Look, I know I'm a bit crazy on this stuff, but for me, the interest rate thing is completely of no interest. Not that I don't think it matters what rates are. All I'm saying is that they play a useful stabilizing role in our modern economies, and they will do what they need to do when they need to do it. And we should just sit back, wait for the news to come in, and stop trying to speculate around these decisions.
I'm giving you carte blanche for your last point.
I think interesting that all of this negative news continues to not drag markets down.
Even the durable goods numbers that were out in the US.
Although conversely, there were some interesting positive numbers from Best Buy, which is a major electronics retailer in the US. So that signals maybe the consumer's not looking too bad. Plus, initial claims, the Jobly weekly claims, were down. So I think it's a mixed scenario, but the market, for what it's worth, the big money in the market continues to buy into these
Isn't it the
news
same
stories.
old story that we've got excess liquidity, the US will come in and bail out and print money and buy up treasuries?
No. That's completely the wrong conclusion to draw.
Isn't that what is supporting
It's
us right now?
the recovery from 2008. It's the strong corporate earnings.
Driven by what?
It's the enormous new numbers of consumers and producers around the world. It's all happy from here.